So it's telling me it's becoming much, much more important, and that the tide is turning towards silver, precious metals, hard assets. Does it mean that the S&P is going to crash? Saturday, January 24th, 2026, Monaco 64, Home of Alternative Economics, and Contrarian Views. So it's been a long time coming. It's required a lot of patience, and I think that's the main ingredient to successful investment. It's patience, especially if you've done your homework and you have like an objective and you have like a goal. And what I'm talking about is silver, right? It's taken a long time. Yesterday, for the first time ever, silver traded above 100. On the spot price, it settled around 103, just above 103 at the end of the day. So at the end of the week, so highest closing ever. Of course, don't have to say that. But there's some other milestones that silver made yesterday, which I think are even more significant, which tell me that silver is soon going to become a very important asset again. It's not just because it's a triple-digit asset, right? We're hearing that it's not a double-digit asset anymore. I think that's a little bit of superficial, to be honest. We're also going to look at the dollar. We're going to look at the prospective new Fed chairman. I think that's really important as well. But before we start, I just want to talk a little bit about silver for my UK viewers, because here in the UK, we pay VAT when we buy silver, 20%. And over the years, I've always heard people complaining that they're not buying silver because of the VAT. And I've always told them I wouldn't worry about it, because if silver does what I think it's going to do, you won't really care about how much VAT you paid. And I have here an example. Actually, it's an invoice of the first silver I ever bought from Gold Investments. Don't worry, it's got an address there. I don't live there anymore, so it doesn't matter. So you can see that this is from the 4th of July, actually, 2003. And it's for 1 kilo bar of silver. And the price is 118 pounds plus £20.65 VAT, which at the time was 17.5%. Right now it's 20%. So the price per troy ounce was £3.67. With the VAT, it ended up being £4.31. So there you go. There's proof there. There's my name. And yes, I asked Mike Tempo at the time, Oliver and Simon's father, why VAT on silver, not on gold. Well, he said the VAT on gold, they took it off in 1999. So yeah, I wasn't too happy about that. But the price of silver now is £75.76. So at the time I paid £4.31 with the VAT. And talking about silver and how much it's moved, I think we need to start looking at silver a little differently in terms of safety, because I've got this 50-ounce Engelhard bar here that I keep on my shelf, and I've got also a 10-ounce bar here I keep on my desk. And up until, I don't know, the beginning of last year, This was worth, yeah, about $1,000, and this was worth about $300. But now I did the calculation with where silver is. Both these bars are worth over $6,000. So what I'm going to be doing is I'm going to be putting them away in my Dirty Man safe and keeping them safe from anyone who tries to take it, right? And what is Dirty Man safe? Well, it's one of my long-term affiliates. It's a way to hide, secure, and retrieve your valuables with ease. So I do have a link to a landing page for Dirty Man Safe. I think it's more important than ever to safeguard not just your silver, but your gold and other things as well that are dear to you, documents as well. And you get 10% off by using my link, and they will ship to the UK. They will ship to Europe, aside from the US. So here's the chart of silver in British pounds. And of course, a lot of people are going to be kicking themselves. I mean, we had plenty of time to accumulate silver, even under 20 pounds. But now that it's taken off, a lot of people are going to sit on the fence and they're not going to get involved. They're still going to worry about the VAT. And I would argue in the US, I'd be doing the same. I know you don't have VAT. I don't know if you pay sales tax there. You probably do in some states. I wouldn't worry about that either. And I would keep stacking, because I think it wasn't just the fact that we broke 100 that's very significant. And we're going to look at that now at the charts. We'll look at the dollar index and the Fed a little later, because I think these charts are highly significant. So the first chart I want to show you is the price of silver per troy ounce as a percentage of the S&P 500 index. And I looked at this ratio with you guys maybe a month or two ago or recently, and I said we were breaking out the high from 2021, I think, and that was very positive, but that we still had quite a bit of work to do to break this very long-term trend line, going back from the high. Silver made a high in 1980, right, to the high in 2011, when silver really did well versus the S&P 500. But I had a look at this chart last night, Friday, and I was surprised that we already broken through that line. We're at 1.49. That line is around 1.25. And it is a weekly chart, actually, so it's not a monthly chart. But yeah, the fact that it's done this so fast is telling me a couple of things. That things are not well in the underlying financial system. And the other thing is that this is telling you that silver is becoming much, much more important. Yes, it's not a double-digit asset anymore, even though we might very well go back and retest 100. I wouldn't be shocked. Yeah, so it's telling me it's becoming much, much more important, and that the tide is turning towards silver, precious metals, hard assets. Does it mean that the S&P is going to crash? Not necessarily. It just means that silver is going to outperform the S&P or stocks, and there's a lot of room on the upside. I mean, back in 1980, yeah, this number was at almost 50% of the S&P. Right now we're at 1.49, and back in 2011 it was at around 4%. So a lot of room on the upside, and that's why $200, $300, $600, $700 silver is not out of the realms of possibility. And you might say, well, what if we have a crash in a deflationary environment? Well, I'm going to talk about the prospective Fed guy in a minute, and you'll see why that might not be very likely. So I thought you guys would really like this chart. And there's some more, of course, here that I want to show you. Let's have a look. Yeah, the next one is to do with gold. Of course, gold closed less than 20 bucks from 5,000. It's only a matter of time, I think, that we'll breach that level, 5,000. But again, we need to look at gold in terms of other assets, and especially the S&P 500 index. And I've got here a gold price per troy ounce as a percentage of S&P 500 index, just like we looked at silver. And I've spoken about this ratio as well. And I noted that we'd broken some key levels, but now we've broken some very interesting levels here. We've broken the high from 2021, and you can see that there's not much resistance on the upside, really. And the high in 2011 was around 170% of the S&P for gold. And here's the same chart on a monthly basis and going all the way back to the 1920s. 1920s. And you can see the breakout that we've had this week on this monthly chart. And I circled the top of the stock market in 1929 and the bottom of this ratio in 1929. And it's interesting that we've been testing that level ever since, let's say, 2015. And we've finally broken above that level. And look what happened in 1929 after it bounced off that level. Gold outperformed the S&P. Well, that was the crash, right? At the time, the dollar was gold. So it's normal. It's just the S&P chart put upside down, and it looks like it's rising, right? But it's gold that's rising. It's the stock market that's dropping. Again, I will tell you why I think we might continue to see the stock market going higher, but it's just that gold and silver are going to go up a lot faster, because back in the late 20s and early 30s, the Fed wasn't as powerful and able to do what it does these days, i.e. in terms of QE, in terms of yield curve control. We are still under a gold standard, maybe not from 1933 domestically, but internationally, the U.S. couldn't just print as much as it wanted at the time, right? Another ratio that I've looked at and showed you many times, the Dow Gold ratio, and that one as well, not only has it broken below 10 this week, we're at 986 now. We've broken this trend line that we've had from 1980 up until recently here. And it really looks like it's keeling over. And I've got like a 47-year cycle that's pointing to 2027. But you never know with these cycles. It could take a little longer. So yeah, another chart pointing to the outperformance of hard assets, especially gold and silver, to the paper assets or the stock market. So now let's move to the dollar index. And one thing I would say about the dollar index, yes, a weaker dollar does help gold and silver, but doesn't necessarily mean that the dollar has to go down for gold and silver to go up, because if you look at this chart here, dollar index made its all-time low back in March 2008, and gold at the time was just above 1,000. That's when it made a high of 1,031 or thereabouts, and the dollar index was like just above 70. And here we are, and the dollar index is almost at 100, and gold is at almost 5,000. So over the long term, it doesn't matter that much, because all fiat currencies are sinking. But in the short term here, there's a lot of people watching this this trend line, and it looks like we're breaking this trend line. And I've spoken about this being also a bear flag. Yeah, it's hugging the trend line, but you can see that it looks like a bear flag. So we could see a big leg down in the dollar, and that would help gold and silver, of course. And what could be making it so that the dollar weakens? We saw the dollar weak quite a bit yesterday. Well, I think it's the debt, the insurmountable amount of debt and deficit spending that needs to be made manageable. And that's where the new Fed chairman comes in. And we're hearing now that BlackRock's Rick Rieder surges ahead in race to chair Federal Reserve. It says here, Donald Trump has said he plans to name his nominee to run the U.S. Central Bank in the not too distant future. So what I know about Rick Rieder is that Wall Street is more comfortable with him because they think he's more independent from the administration. Apparently he's donated to Democrat politicians. Yeah, maybe on the surface that's what it looks like, but he's still a Wall Street guy. He's still a BlackRock guy. And why do I say that? Well, because it was BlackRock who devised the Go Direct strategy at Jackson Hole in 2019, prior to the repo crisis. And yeah, I highly recommend John Titus's video on that. I'm going to put it up here in the cards if I can find it. The Go Direct strategy of BlackRock. And that Go Direct strategy was used in 2020. It's almost as if they knew that was going to happen, right? To inject massive QE, not just into the financial sector, but into Main Street. And that's what led to the high prices that people call inflation in 2021, 2022, 2023. President Trump seems to think that he wasn't to blame for that, but he was the one who started massive QE and the Go Direct strategy of BlackRock in most of 2020 up until the beginning of 2021. The Biden administration just continued that. You just have a look at the graph or chart of M2, and you see that it was under the Trump administration that this policy started. So yeah, that's where Rick Rieder comes from. And what I've heard about Rick Rieder from my sources is that he wants Fed funds rate down to like 1.5%. We're now, I think, at 3.75. He wants yield curve control, like he wants to manage long-term treasury yields, not to let it go too high. And even more significant, apparently he's willing to tolerate inflation. And the reason I do this is because when I talk about inflation, I mean the money supply, right? But the general public, mainstream academia, the Fed, Wall Street, they look at inflation as the CPI. But anyway, he's willing to tolerate inflation at 3 to 4%, just like the Bank of England tolerates it here, because we're almost at 4% and they're cutting rates. So I think that's why the dollar looks like it's going to keel over, especially if he nominates this guy. It's not a done deal. The reason why they're talking about him is that in the betting markets, he's become the top pick. And Hassett, who works at the White House for Trump, he's out of the picture now. And but I think Rick Reeder is probably even more of a dove than Hassett, but Wall Street seems to think he's all right. Maybe because he's going to pump a lot of liquidity into the market, and he's very knowledgeable about the bond markets. And yield curve control, what that means is that the Fed will say, we won't allow the 10-year yield to go above 4%. We won't allow the 30-year to go above 4.5%. And if they do test those levels, the market tests those levels, the Fed will just step in, print money, and buy those. So what that will do is be basically de facto the implementation of financial repression. And what's financial repression? Well, it's basically screwing savers. You're running inflation at 3, 4, 5%, but you're only giving them like 2, 3% return on their capital, and that's why the dollar is going to go lower. But they've got no choice because the debt is so huge. What they're hoping is that they will grow out of this debt as a percentage of GDP, like it was done in the 50s and 60s. But yeah, in the 50s and 60s, gold was fixed. So gold stayed at 35, but eventually the whole thing blew up, and gold went up to almost 900 in 1980. So the other reason why I think the dollar is weakening is that even America's allies are starting to diversify because of what's going on, because of what President Trump does from day to day. No one knows what he's going to do tomorrow, let alone next week. So I think that's one of the reasons. It's not just America's main competitors and opponents like China and Russia that are de-dollarizing now. It's Western Europe too. They see it as a threat to have too much exposure to the dollar. Yeah, and I heard that German politicians are talking again about repatriating the gold that they still have, some of the gold they still have at the New York Fed. The last time they did that back in 2013, it took 3 years to bring back 300 tons to Germany. I think they still have 1,200 tons at the New York Fed. I wouldn't be too comfortable having that much gold with the New York Fed, especially seeing what's going on geopolitically and foreign policy wise. With that, I'm going to wish you all a very nice weekend. I'm not sure if I'll be doing the Sunday live stream tomorrow. As you can hear, I'm still not 100% from my stomach bug, but I feel a lot better. So we'll have to see. Anyway, Take care. Bye.